We can learn the theory of trading in a couple of months, but then the practice is what really matters. You need to feel the emotions of real money. People sometimes trade paper accounts for a year and then they start real money trading and they're completely shocked losing money because the feelings are absolutely different. So we just need practice.
We're joined by a very special guest today, new guest on the show, Lia Holmgren, also known as Lia the Trader. Lia, welcome.
Hi, thanks for having me on the show. So I worked as a marriage counselor for a decade, and I was always fascinated by psychology, and I was investing since I was 18. So I always loved everything about psychology and money. So I kind of combined what I knew from my professional work, what I knew from my passion, right? Money and investing. So I became a trader.
What is your approach to trading? What kind of things do you look at?
After many years of doing this, I really love the approach less is more. I just really love to look at quality setups. I like to be in those setups for momentum. So I do momentum trading mainly, swing trading, breakouts. That's what I specialize in. And then when it comes to options, I love to do spreads and I love selling options. That's kind of providing me additional income. So that's what I do.
It's funny, you kind of described my trading there. I'm a short-term swing trader as well, for the most part. I typically, depending on the market, will not stay in a trade over a weekend, but during the week, I think swing trading can be quite effective. But no matter how effective your approach is or your quality setups, traders often get into trouble simply because they don't stay focused or they can't stay focused because of emotions. And that's a lot of what you talk about in your business, right?
Yeah, as a psychologist, I really coach traders and I help them to be more focused and to recognize when they are acting based on emotions and hasty decisions and when they don't have a plan, they don't have discipline. I help them to determine actually what kind of trading is good for them, because I think you should trade who you are. Some people are fast. They like to trade futures or scalp or trade zero DTs. Some people are slower. They need more analysis and they like to do shorter term swing trading, right? For different personality, to each their own. And I think they get in trouble when they, first of all, look on too many social media and let a million other people tell them what to do and react to that. So I think in trading, we should not be reactive. We should have a plan and be proactive. A lot of new traders think, oh my God, I can't lose. If I lose, I'm a failure. It doesn't work that way, right? As we know, when you trade for a long time, even the top traders in the world lose 50% of time, oftentimes, maybe even more. But they still make a lot of money. And this is what new traders have to understand. So I like to put the numbers on the table, so to say, and explain to them what's the point of successful trading. It's oftentimes not the win rate, but how you manage your risk.
Yeah, that is a really good point. The two things that I took away from that, one is that traders are not often consistent with their risk. One trade will have big risk, one trade will have less risk, and then becomes completely random which of their 50% of their trades become successful. And if they're all over the place with their risk management, there's just no way to build any consistency or any long-term profitability.
Yeah, exactly. I lose on trades also, but when I see the trade goes against me, I get out. Like, I have no ego. I don't mind losing small, right? I have my stop and I get stopped out. I don't care. I have no emotion around that. But when I know that I'm making money and I know the trade is going in my favor, I don't mind going more into risk and adding into a successful trade, not adding into a losing trade. And that's what many people also do, because they think, oh, I'm adding for a cheaper price. But then you do it until you run out of money, right? So these are all the mistakes that I even wrote in my little ebook that's for free. People can just download it on my website. 11 mistakes they ruin your trading account.
Everybody says, oh, I paid my dues when I first started trading. I had to do all that. My philosophy has always been, if you can just put in a little of education time, maybe you don't have to pay your dues so much and you can get ahead of that curve. And I think that's what this kind of content, this kind of education really helps traders.
Yeah, it's like, oh, we have to blow our accounts. That's not true. Like you see it oftentimes on Twitter or somewhere. Oh, I blew my account, but I guess we have to. No, because that can be so traumatizing. It can have such negative effect that you will never be able to recover. Or even if you start trading again, you will be traumatized. You will be making trading decisions based on the negative experience you had. And that's really hard to recover from psychologically.
Yeah. It goes back to the fact that you want to limit the losses on each trade. You don't want to blow out your account, or you don't even want to lose 50% of your account, because if you're down 50%, now there's this kind of emotion that says, oh, I need to trade more to get back. And that gets you into even more trouble.
Yeah, you need to make 100% back, right? It's just difficult. People just start spiraling down because a lot of people, they do really well when the market is trending. It doesn't matter if they go short or long, but the moment market is choppy, as we see this year has been very challenging for many traders. Of course, in futures trading, it's fun to have a kangaroo market, but if you are swing trading, it's nearly impossible to have nice risk to reward trades, right? So it's important as a professional trader to recognize what kind of market are you trading in, adjust the strategy, and if you can't trade the market, just wait. Another problem I see with many traders, they just want to trade every day and they cannot stay calm and not have FOMO and say, you know what, just because I'm a trader, I don't have to take a trade.
That's a great point. Maybe you're not, for some reason, you're not trading well on Wednesdays. It doesn't hurt to take a Wednesday off and just get a fresh perspective on it. Do you have a way that you kind of build a trade around account risk? There's trade risk, right? But there's also account risk. So what is your philosophy around managing that account risk as well?
So I usually try to not lose more than 1% of my trading account on one trade. That's how I do the risk to reward for me. And sometimes if I'm very confident about a trade, I would do 2% risk. So for example, from $100,000, I structure my stop loss on $1,000. And then after a quarter, I reevaluate if I'm up or down, then I will adjust this risk units. I just call it an R. And that's how I trade. And every trade is the same. Of course, if I lose $1,000 on a trade, but then I have a trade that goes really well for me, I will try to find setups that are having probability of more than 1 hour. Or then what is nice to also do for the account, I look at quarter of my trades and I average how much I was making on each trade. The average number would be my stop loss. So not 1% of the account, but let's say if I make on average $600 on a trade, that will be max I want to lose on a trade as well, because that's more showing my performance instead of just a simple math. So that's kind of a very good strategy.
I like that approach. I like that approach. Let's shift gears a little bit and talk a little bit about what traders can do when they find themselves in trouble or they find themselves in a bad emotional place. What can a trader do to kind of snap out of that?
So number one, stop immediately. Do not touch the markets and calm down. And it doesn't matter how long it takes, because being in this kind of fight or flight, which it is a fight or flight response, because losing money is same like getting chased by a predator. It is the same response in our body. So first of all, we need to calm down to be able to make rational decisions. A lot of traders do not want to look and analyze their trades to actually find out why they are losing money, because it kind of feels bad. But they have to face their mistakes to learn, right? Analyze why I'm making those mistakes. Is it a psychological problem? Is it physiological? Am I tired? Am I going through a hard time in life? Or the market is just, it's choppy and I can't trade this. And then come up with a new plan. What can I improve? And even if it takes a month or two, it's okay. I took those breaks twice in my career. Even wait for a better market.
The markets are always changing, and perhaps your approach works in a higher volatility environment. Now volatility has gone down, or vice versa, right?
Yeah.
And you just need to take some time to reevaluate and maybe retool the way you get in and out of markets.
Sometimes we just have to size down, or we have to reevaluate what's going on. These are all things one can do. And again, it happens to everyone. And that's why new traders need to have their expectations straight and understand this will happen sometimes in their career.
It's funny, people come to trading. They are often very successful with their first career. They could be doctors or airline pilots, and they think they can come in and start trading and be successful because they're smart. I'm a smart guy. I'm a doctor. I should be able to trade and be successful at it. They don't realize that they spent 8-10 years learning to be a pilot or a doctor. And trading is just as critical a profession as any. And in fact, maybe more so, because you're actually risking dollars based on your performance. And so one of the things that I think we need to get across is this is a serious endeavor, and it takes education. It takes understanding yourself.
The issue is people look too much on social media with this and see all these fake overnight millionaires that I really do not believe in those numbers, to be honest. Oftentimes people ask me, hey, I have $2,000. I want to start trading. I'm hoping that I can change my life. Well, I have to be really brutally honest. Don't trade with $2,000. It's just really sad because a lot of these people just lose all the money immediately. We can learn the theory of trading in a couple of months, but then the practice is what really matters. You need to feel the emotions of real money. People sometimes trade paper accounts for a year and then they start real money trading and they're completely shocked losing money because the feelings are absolutely different. So as you said, flying a plane or becoming a therapist, you need 2,000 hours of practice to be able to work with people. So the same with trading. We just need practice. I really suggest don't be greedy as a trader. Even if you trade with 10 shares or 5 shares, it doesn't matter. But what matters is to see your results after a month and see how much am I losing on the trade. Is this number consistent? Is this number bigger than the losing number? And once you get this discipline in 3-4 months, then increase. Keep doing the same thing, just with more.
In my brain, I have this graph that goes from I'm stressed to I'm not stressed. And it all depends on the trade size, right? So I know what trade size I should be trading so that I'm not stressed during the trade. If I lose the trade, that's okay. But if I go over a certain number of contracts, then my whole mindset changes.
If you lose a number on a trade and then you're up all night because of that, it's too much. Adjust it.
So I'm going to give you the last word here. If you had one piece of advice to give that new person just getting started trading, what would you tell them? How should they approach that?
Just start very slowly, have expectations in place, be very disciplined, because if you're someone messy who can't keep regular disciplined schedule, as sad as it sounds, I don't think trading is good for you. If you try to do this for 6 months or a year and you're still losing money and it just doesn't work for you, I would love people to understand that this is not an industry for them and rather just invest and let the money work for you without losing them. Good luck to all the new traders. I hope it will work out for you because trading is so much fun.
I love that philosophy. You know, as a broker, we want to bring in new traders. We want them to trade. But to be honest, our underlying philosophy here is that if this isn't for you, we don't want you here either. We want you to have and live your best life. And if that's being a trader, fantastic. But part of my role and my team's role is to kind of help people determine that. We give them the information they need and try to point out, like with sessions like this, that this is not necessarily for everyone. So we completely agree with you. So thank you so much for being with us this first time. We'll have you back again. Maybe we'll take a little bit deeper dive into how you trade, but thanks so much for being with us.
Thank you very much, Mike, and the team and NinjaTrader. It was a pleasure to be here.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.